Welcome to Yield Nerd, an educational show about how you can acquire and manage yield. How about this, Yield Nerds, episode 100? And I am going to take the full power of AI, the rage of the economy, to help me with this episode. I call this the 2024 Wheel of Economics game. I went to Dolly and said, give me a professionally dressed woman conducting a game show, spinning a wheel of fortune with choices including default, debt mountain, inflation, soft landing, hard landing, recession, and look at that. Let's play the 2024 Wheel of Economics game. Well, we are at 230 something subscribers. Thank you. We're about 15 months old. And if you're tuning in for the first time, please use the Yield Income Investing Roadmap. That's our playlist. And hey, even a blind squirrel can find a nut once in a while. Don't believe me? Do your own homework. My usual disclaimers: this is not tax advice, it is not investment advice, I am not a wealth management advisor, I also am not pitching any product, no sponsors, and I do not espouse one version of politics or the other. All right. Hey, I wanted to share my excitement about where the market is headed towards the end of the year, the infamous Santa Claus rally. There is a lot of sizzle. There is an incredible soft landing going on. The curves here that you see, these are the Magnificent Seven. They are going nuts. They are having a huge, exuberant end of year. How awesome. And on top of all of that, there is a very good chance December 12th, 13th, when the FOMC has the next meeting, we may get a reading for inflation that is 2% or below. Mission accomplished, and I feel so happy when I see that. This is a very clear message. The greatest bull rally is going to start. It is going to rain profits. The Magnificent Seven will save us all. So I went back to Dolly and said, give me a city with buildings made out of dollar bills where it is raining coins and people are taking shelter from the pelting in umbrellas made of gold. Look at that! That looks like 2024. I am very excited. I'm reading the market. The market tells me that the Magnificent Seven is where it's at. One more thing. I'm channeling AI-generated Steve Jobs here. The Magnificent Seven, Apple, Microsoft, Google, Amazon, nvda, Tesla. I figured I would just check my books a little bit. Just make sure that instead of starting from the Magnificent Seven and hoping for the best, I can start from the basics and end up with the Magnificent Seven. As a matter of fact, I did. So let me explain what I did. I said, hey, I just want domestic stocks. I know the Magnificent Seven are all domestic. And I want very high trading volume. I again know the Magnificent Seven have fantastic trading volume. I want high profits. I mean, come on, the Magnificent Seven, they must have enormous profits. I also don't like debt. I mean, these are companies with a lot of cash. I don't think they have debt. And I also would love cash flow for all the reasons we have discussed before. And you know, I want to pay a fair price. So I'd like a PE ratio of less than 20. To put it differently, you know, I want to pay a fair price for a company that's making a lot of money and has good profits. Hey, I ended up with the Magnificent Seven. Look at that. Low PE ratios, excellent cash flow, low debt, phenomenal profit margins. Yes, I'm guessing, you know, this probably is NVIDIA. I don't know. It looks like it. They have huge profits. I'm guessing this is probably Apple, and that's probably Meta, and maybe that's Tesla. Let me quickly check, because I started from the criteria and ended up at the Magnificent. What? What are these companies? What in the world are these companies? That is not what I'm told are the Magnificent Seven. Wait a second. They are in the energy industry, industrials, and a trading company? Oh, wait a second. But hey, don't take my word for it. I have conflicts of interest on this page. I own about a half of them. But if you started from fundamentals and looked at what should be the Magnificent Seven, you do not end up with anything in the same ballpark as the market celebrates as the Magnificent Seven. My message to you is very simple. To me, it looks like we have some reality distortions. Don't believe me? Do your own homework. What else is reality? We've got the two parties fighting over, should we spend 1.5 trillion or should we spend 1.6 trillion? And this fight is happening with the House that has a two-seat majority. Everybody but two has to, go along with the plan if it is a Republican plan, or you have to work in a bipartisan manner. The Senate needs the tie-breaking vice presidential vote to get anything done, and that is their reality. And we have primary elections. In that reality, we have to figure out how we are going to come together as a nation and throw another $1 trillion of spending when we have 3 trillion in debt maturing next year. Tough, tough reality. Well, so I thought I'd play this game called the economic seesaw game. Let me explain. The top row is all what the government would consider revenue. Taxes that you and I pay, taxes that corporations pay, and innovation would make their revenue go up, I suppose, increase the GDP, and they could also throw some new money into the economy, which they sometimes do, or take away money from the economy. That's the top line. The equation balances by us paying the debts we owe, and that's the treasuries and other kinds of debt instruments. And sometimes, if you spend, you may be left with a budget surplus, meaning you spend less than what you make, or a budget deficit, which is you spend more than what you make. Well, that looks like a lovely seesaw game. Those gentlemen are having a lot of fun. Good for them. The country, unfortunately, is not. As you know and I know, given the high short-term interest rates, our debt payments are very high. Our deficit is very high. And so what can we do in this game? We need to probably increase one of the three things at the top. Well, let's save the trouble here. In an election year, nobody is going to dare to increase individual taxes, at least not for a large swath of the population. So that's not going anywhere. If either party proposes an increase in corporate taxes, that will get them, voted out of power. Guess what? Then the only thing left is to print more money and print more money and put it into the economy. And no matter which party, however it is we come together, there is another trillion of new money coming into the system. So what does that do to this equation? We've already accepted, whether we like it or not, that another trillion-ish dollars are going to come in to the system. That will further increase our debt payments, and it will further increase our deficit. In that mix, the seesaw game doesn't look too good now. In that mix, when there is more money and higher interest payment and higher deficit, what do you think the new money is going to do? It will devalue the dollar. Now, devaluation of the dollar has some positive, some negative effects. However, here is the crazy thing. That new money needs to be owned by somebody. The government can buy that new money. As you may know from a previous episode, our government owns 30% of our own debt. That's kind of how they kind of fudge some of those things. And, if they keep owning more and more of that debt, it creates one kind of a problem, which is the money enters the system. As more money enters the system, it creates inflation. And if they don't own the money, there is going to be a greater supply and the same or lower demand to you and I, which means interest rates will go up. So guess what? That is the crazy economic seesaw. If this dude shoots the other dude, he goes down as well. So he doesn't want to shoot the other dude. If that dude tries walking inside, then this guy falls down. So neither one of them can take the other down. And the only solution is for them to collaborate, move towards the center, and not hurt each other. And so in a country, in a system where debt is going up, deficit is going up, and new money is entering the system, unfortunately, you are going to have inflation. Because that new money is going to shore up companies that really should be sinking. And if that new money comes in too early, we'll have inflation. And in order to avoid inflation, we're going to go back to quantitative tightening, and quantitative tightening will lead to higher interest rates. It will lead to a spiral that nobody wants. So what is the most likely scenario? And this is the spirit avatar of Chairman Powell. He has a very tough job. In all likelihood, interest rates are going to remain higher for longer. If there are rate cuts, my humble opinion, I am no economist, my humble opinion, they are not going to come in the early time of the year unless there is some global catastrophe, which I would never wish for. So the rate cuts are more likely to come towards the third quarter. And let's be real, there is an election, and the FOMC is not going to take very drastic changes one way or the other right before an election. Look up what happened in 2022. That was the time Chairman Powell's term was re-upped. And they were very little in terms of interest rate increases before his term was re-upped. And literally 3 weeks after his term was renewed, the interest rates went very, very high. So in all likelihood here, until after the election, we're not going to see changes. And you look at the American economy, you can poke a lot of holes in the US Treasury. Oh my God, the deficit is bad, the spending is bad. Is this going to be a reserve currency? So the US Treasury, I agree, is a one-eyed, injured, panting, limping pirate. And then you look at the rest of the world. I am so sorry. The rest of the world is no good alternative. So this leads me to my 3-month strategy. I'm going to still stick with my treasuries. And I do think the first signs of trouble will come early next year in corporate delinquencies. Some of them will have to raise money. There will be some bank loan issues, only because you can't sustain this high interest rates for too long. And I will jump into the magnificent 7 or 17. I may buy tech stocks, but they better come at the right price. Otherwise, I'm not going to go there. I intend to T-bill and chill. Happy end of year. Hey, remember again, even a blind squirrel finds a nut once in a while. Do your own research. Don't trust me. Thank you. Thank you for listening to Yield Nerd, a do-it-yourself show for yield accumulation and management.